But Kyle, tell me, man, like just everybody wants to know what the hell's going on? What is happening to this market? Why does crypto feel like so stuck and kind of hard to explain right now? And is there like any real reasons why the market's chopping sideways?
Yeah, I think there's a lot of reasons. When the markets get like this, I look at two things. So first is I look at, well, what's the macro backdrop saying? Is that setting us up for a good backdrop or a bad backdrop, right? Maybe this has nothing to do with crypto at all. Maybe it's just the macro world. So I look there. Then the other thing I look at is just the crypto space in general. What's adoption look like? What's the the curve of like, is it exponential? Is it growing? Is it not growing? Is there good things happening, not good things? So you kind of just look at the space overall and to try to tell you what's going on in the crypto space, because maybe it's just, you can see it's different than if you look at Bitcoin versus gold. It's kind of, going the opposite way. If you look at crypto versus stocks, it's kind of going the opposite way. So you're like, is this a macro issue or is this just an issue with crypto? And then you kind of try to parse it out between the two and figure out what the heck is going on, which look, is not an easy thing. Obviously, we've been bullish all Q4. That has turned out to be wrong so far. There's still about a month and a half left. So I guess you never really know what happens or what will happen. But so far, things obviously do not look good. If we kind of dive into why that is, and I would say when I say they don't look good because of the charts, right? Obviously, if you're looking at the charts all day, it's very, very red. I'll even bring up my chart just to give some context here. If I can just share this.
Please do.
Here's the Bitcoin chart. Funny enough, last week I actually said, hey, I don't think it looks bad enough. Things are bad, but I don't think we should rock it. Everyone was like, oh, government's going to open up. It's time for us to go up. And I said, you know what? I think we got to get down to 92 or 93. We need more fear in the markets is basically what I said. And the reason was the fear and greed index chart didn't quite make it into the red, as you can see down here, like it did during the tariff moments back in April.
Mm-hmm.
We kind of touched it, but barely. And I was like, you know what? Before we go up, we're probably going to need to go back down even more and get a little bit more fear, which I think we hit that over the weekend. It feels like, the everyone's pretty scared now. A lot of people are kind of pivoting. So I also said 92, 93. I've got this white line here. We are right on it. We touched it over the weekend. I guess this is, over the weekend, closed right on it, and now we're sitting at it. Now, it still doesn't look good, right? You'd expect a big bounce off this. We're not getting that. Now, the question is why? I think two reasons. Let's start on the macro side, then we'll dive into crypto. On the macro side of things, there's a lot of confusion right now, right? People don't really know what's going on because, one, we don't have any data, right? We haven't had an inflation print for October, which we were supposed to have. We don't have any like jobs or unemployment data. There's just a lot of things that we don't have because the government's been closed for whatever it was, 40 days or something. So there's this like fear of, well, I don't know what's going on in the markets. And so I'm going to continue to let that fear spiral and spiral and spiral because there's no news and there's no data to tell you otherwise, right? So I think the odds of a rate cut in December have now gone from what were like pretty close to 100% down to, I think it's a 50-50 chance right now. So on the macro side of things, there's a lot of people just thinking, hey, unemployment's going to be way higher and inflation is going to be way higher. And so they can't cut rates. And so we're definitely not going to cut moving forward. So I think that's kind of at least the perspective of most people. I really don't think that inflation is, as I've been saying all along, is as bad as people think. I think we might actually be flat, if not even lower, whenever we get our next inflation print, because of this sort of growth scare we had between the US and China. Also because the economy is good in some parts, but the economy is not so great in other parts. So it feels like there's just this kind of battle there. But like the biggest things that move inflation is like oil, which has not gone up at all. If anything, it's gone down. I can even show the chart here. Like here's oil, which is currently sitting at 60. So it's gone down and down and down all year. So that looks good. And then the other thing is if you look at like shelter, which is the biggest part of CPI, that's only gone down. So meaning rents and mortgages, or not mortgages, but like the value of people's homes. So that has just gone down. So the biggest components of inflation are down. So I just don't really understand why everyone is so afraid of inflation right now. So there's just a lot of confusion on that side of thing. And then if you look at the even bigger backdrop, which is a lot of these governments are in the middle of cutting rates and running their economies hot. This is not just the US, but China and Japan. And so just like, I don't know, the macro backdrop to me doesn't look so bad. And then the other side of it, I would say, and we'll probably touch on this in a little bit, which is AI is macro at the moment, right? Like AI is just kind of controlling everything. And there's a lot of fears around this AI bubble, which I think we'll probably get to later in the show. My prediction or kind of my thinking around this right now is that we are not in a top of a bubble, but we are in a bit of a reordering or restructuring or rebalancing of what people hold in those assets. So we can talk about that later, but I just think the market needs to digest a lot of random things right now. And so it's just and then there's the 4-year cycle thing, right? Everyone thinks, well, because it's 4 years for whatever reason, it's got to be over. So the market's got to kind of work its way through that too. So there's a lot of things for the market, I think, to just kind of figure out, and that'll just take time.
Bitcoin changed the investment game. Now AI changes the strategy. Crypto's wild ride demands perfect timing, selling before drops, buying as it climbs. While most investors panic, sell, or hope, a select few leverage a crucial edge: AI. Blocktrust IRA's trading platform spots market patterns with precision no human can match. Since 2020, their Animus AI platform has outperformed Bitcoin by over 250%. Visit milkroad.com/blocktrust today to get up to $2,500 in bonus crypto and transform your investment strategy. I want to touch on your inflation point as well, Kyle. You did say that you're not as worried about inflation. And we also wanted to go over this tweet from the Kobesi letter that's giving us a lot of reasons potential for inflation, right? So I think I want to get your thoughts there, just kind of clarify that, because there are potential US $2,000 stimulus checks in the US, which may or may not happen. Stimulus packages for Japan, China, quantitative tightening is ending on December 1st. There's that TGA, like the Treasury that has like $1 trillion that's going to come in, and lots of other reasons that could see a lot of money come into the market. And these guys are saying, in what world is another wave of inflation not on its way? How does that kind of juxtapose with kind of what you're saying about the CPI?
Yeah, absolutely. So CPI is looking at inflation specifically in the US. So like a stimulus package in Japan or in China isn't, I mean, in some ways it does impact it, but a lot less than if the US was doing a huge QE, which they're not currently, right? And then the $2,000 stimulus check, yeah, that might bring some inflation like we saw in 2021. But remember, that was a bunch of stimulus checks. And also, we don't know if this is actually going to happen. Scott Besson already came in and said probably won't be like just a random handout check. It might just be like a forgiveness on their taxes. Like, we don't know in which route this is going to come. So I don't think that necessarily is fully like, hey, we're just going to give all this money in trillions amount to all these different countries. It doesn't necessarily pan out that way yet. I think there are versions of stimulus that are happening, but in certain sectors. So I think they can be a little bit more strategic about it. I also think you have AI, which is doing massive things to help on the inflation side of things in some areas, also maybe worse in some areas. So I think that is lowering things. You have this sort of K-shaped economy where a lot of the even if they do these stimulus packages, there's still a lot of the world that has most of their money in their homes, if that, in student loans, et cetera. And they're not buying much because they're not making a shit ton of money. And so there's just not a lot of ways that I think inflation is going to necessarily spike or at least get out of control. Again, I've said this entire year, inflation should go up, but just very minimal, which is exactly what it's done. The fear is really, will inflation jump and spike up to like 5, 6, 7, 8, 9, like we had in 2020 and 2021? I don't see that world happening right now. It just doesn't make sense. And then the last month of this sort of growth scare that we've been having, that's going to push down inflation even further. And then rates have been fairly high, which means not a lot of people can afford to buy homes, which means the price of our homes and rent is going down. That's been happening for a while now. And that's the biggest component of CPI. So there's a lot of reasons why it doesn't really make sense that inflation will go crazy high. Again, I'm not saying it won't go up. Generally, in a business cycle, when the economy is expanding, inflation will go up, and I expect that to happen. I want that to happen because that means good things. It means growth is happening. Again, the key is, does it spike like crazy? And there's just doesn't seem to be any reason for that. Now, if we get a bunch of $2,000 stimulus checks, sure, that might spike inflation. But before that happens, they're going to have to spend those stimulus checks, which means stocks and crypto are going to go up like crazy before that happens. And then we need to react to that. It's not like the central bank or government is ever ahead of inflation, right? We're always lagging and way behind things. And so there's a lot of things that need to happen before a lot of the stuff on the Kobasi letter there is going to impact anything. And so I agree, inflation will likely go up in the future. It's just not going to be that bad. And if it is that bad because of the things they're pointing out, the markets are going to go way higher before that happens.
Yeah, exactly. Bullish for crypto, hopefully before any of that takes place. And I want to bring it back to crypto as well, Kyle, before we're kind of spiraling into macro AI, which we will come back to very shortly. But I'd love to know, What's happening to the trend? Are we still in an uptrend? Is that trend intact? Because everywhere I look on crypto Twitter, including people, I see people like Ben Cohen telling me about death crosses and things that I feel like I only see at scary times when the greed fear index is below 10 or below 20 or whatever we're at. What's happening with our market structure?
Yeah, so this week was, if you're a technical analyst, was not great. And so what I brought up here on the screen, as you can see, this green line, which is your 50-week moving average. We went below it 2 weeks ago, but we came back. We actually didn't close below it. So everyone's like, yes, we survived. We're going to continue to make it. The bull market continues. And then this week we closed below it on Sunday, and now everyone thinks that it's over and we're in a bear market and it's done. And the reason why is if you look at 2023, excluding down here at the bottom, twice we've gone below the 50 moving average, but we've never closed below it, right? At least in this current bull market, we've never closed below it. Now, that's not to say that we've never closed below it in the middle of a bull market. In 2020, we closed below the 50-day moving average multiple times for multiple weeks, in fact, multiple months. And yet the bull market continued on to new highs soon thereafter. In 2020, we were in the middle of a bull market. The bear market ended around 2019. Obviously, COVID came in. We closed multiple times before COVID and after COVID below the 50-week moving average, and yet no issues. We ended up in a raging, absolute wild bull market, right? So I just don't know why so many people think, oh, we closed below 50 moving average. That's it. Close your computers, sell all your assets, come back in a year's time. That's just never been the case. Like sometimes it doesn't go below and sometimes it does go below. Sometimes when we go below, it means a bear market like here, but it didn't mean it here or here. So why is it that this time it has to be it? Even the NASDAQ, right? Like let's look at the NASDAQ for a second here. It closed for an entire month, over a month below the 50-day or 50-week moving average this freaking year in 2025. And yet, look at how much higher the NASDAQ is versus when we closed below and everyone said there was going to be this crazy bear market, which didn't end up happening. So I just think this technical analysis stuff matters, but it doesn't always matter. It's not that big of a deal, in my opinion. Like it's good to watch, but I just don't think it means like it's not 100%, right? But right now you have everyone screaming saying, okay, we're below the 50-week moving average, so this must be a bear market. It's cooked. The 4-year cycle is intact, and we're done for a year. It just doesn't make a lot of sense, in my opinion, because there's just so many times where it hasn't shown that that is true. And even this year, it's shown that. So I just don't understand why everyone is so fully obsessed over that. Now, it doesn't look great. Don't get me wrong. Like go back here you go. We're under 93,000 right now as we talk. So this obviously does not look good. Don't get me wrong. And to be fair, I've been saying for a while now that I'm not overly bullish on crypto, specifically a lot of the altcoins, right? Because I think a lot of it is just uninvestable. I think last time I was on the podcast with you, LG, we sort of went through this. And so what I really like to look at is like, what is the adoption of crypto right now? And so I really think that what you want to look at is not like users and things, but instead I want to look at how many assets are coming on chain. And so this RWA.XYZ is a great chart to sort of give you the idea of, because in order for crypto to be valuable, we need to bring the current financial system on chain, which means all the financial assets that currently exist, whether that be dollars, stocks, private credit, gold, et cetera, that's where all the world's capital is, right? The liquidity all exists in stocks, it exists in dollars or fiat currencies, it exists in gold. There's trillions and trillions of that. We need to bring all that on chain, and that'll make the crypto assets that we have more useful, right? More valuable. That'll make them go up, right? That'll make Sky as a savings platform way, way, way more valuable because there's more assets you can put into that system. That'll make ETH and Sol way more valuable because they can be collateral and they can be, trustless money on ecosystems that have trillions and trillions of assets on them. And so, these numbers look good. To be fair, though, they don't look amazing, right? When I want to see growth, what I want to see in a company or an industry that's growing, you want to see exponential growth. And honestly, we are not there yet. This is growth, but it's very small. Like we're talking a couple billion a week in terms of like all real world assets coming on chain. That's actually quite small. Like if you were to value or look at like, let's say an AI company or just any tech company, social media, AI, like whatever it is, you're looking for exponential growth that is way, way, way bigger than that. And so as much as this is exciting, it's not actually that much. And so this is why I've been so vocal for the last while saying like, I don't really see a reason for a lot of the crypto space to go up, right? Bitcoin is different. Obviously, it is more of a store of value. It is something similar to gold. So I am surprised to see Bitcoin where it is today. But the rest of the industry, I actually am not that surprised. A lot of it, as I said, is uninvestable. A lot of the institutions and the capital out there can't buy this stuff. And then its adoption is not that fast today. And so I've been a big proponent of saying we need the market structure bill before we're really going to see any momentum, in my opinion, in the crypto space, X, Bitcoin and ETH, and maybe Solana, because they've kind of crossed the chasm and are available in public markets. But even that, the story for ETH and Sol is not that great until these charts are really, really taking off. And so right now they're not. And I think the big reason for that is market structure. So until we get that, I think that you're going to continue to see crypto bleed versus the broader market. But if we bring it back to the bull market, like just don't look at crypto for a second and look at, I don't know, the NASDAQ or the S&P. Does this really look like a bull market is ending and we're in a bear market? Like what? It looks completely like there's nothing there. We're down like 5%. It's up on the day, right? And then the S&P 500, like it just looks so average, so normal to what it's been doing all year. So I just don't know why everyone is up in arms. Now, again, I know crypto is lagging. That's a different story. But until we get market structure, Bill, that's probably just going to continue.
So from what I'm understanding, just to kind of recap your point, which was excellent, is that the 50-week EMA is having people freak out because we closed behind under it, and people don't like that, right? And they don't have, and we clearly don't have much else to hang on to. I think if you're just a crypto person, right, and you expected massive gains at this point, correct, right? And if you're hanging on to 4-year cycle, go back to your previous answer. This is a danger territory for you. But if you look historically, it's not that big of a deal, and also all other assets that should go up with the economy, like the S&P and other slightly risky assets, their structure is still intact, similar to Bitcoin. That's basically what you're telling me. And that the part where you are maybe not so bullish is in things outside of Bitcoin and anything that isn't going to be part of RWAs coming on chain, right? That is basically anything that's not kind of part of those things, that isn't like a heavy utility for RWAs and isn't just the net normal store of value in Bitcoin. It's kind of hard to make larger bull cases for.
Rather than saying the RWAs, I think the better way to put it is just the old financial system, bringing that on chain, right? So what assets are going to help be a part of that? That's your Ethereum, your Solana, your Sky, your Aave, etc. Those things are going to do what? Your Coinbase, your Galaxy, right? Like as institutions come on chain, where do they go? They go to Coinbase and Galaxy. So I think these companies are going to do incredible as they are the big companies that benefit from the whole world moving on chain. And so I remain very bullish on that sector over time. But again, you got to remember, this is a long drawn out process and it's a long drawn out secular trend, which right now is halted because we just don't have clear regulation, which we've known this for a long time. And so do I think that macro is cooked and all markets are cooked? Absolutely not. And I say that because of what I just explained on the macro. And then if you just look at the stock market, everything looks fine in the stock market. Can we get a bigger pullback? Absolutely. It's only been 6%. This is nothing, right? And so this tells you bull market's still intact. The main issue I think that we're having right now is just crypto doesn't have a structural bid because we don't have massive adoption there yet because we don't have a market structure bill. And so it doesn't mean that I'm super bearish on crypto for forever. I'm very excited for crypto. Of course, I've been bullish on this sector for a very long time. I just think we need some clarity so that capital can start to come in. And so I want to remain allocated to it because I think that could happen at any moment. Could happen this year, could happen by January, February. Like I don't know when it's going to happen. But when it does, I imagine we're going to see that trend really start to pick up, and then it's going to go exponential, and you want to be allocated to that. You don't want to be out of the market for that. And so that's the big thing. But that's also just why I think you just need to hold majors because they're not going to go down as bad. Bitcoin's only down 25% right now. That's not a big deal to me. Again, you got to depend on, are you a trader or an investor? And I think this is where people get kind of mixed up. You're on Twitter and you see someone going like, oh my God, it's below the 50-day or 50-week moving average. I'm selling everything. But like, if you're just an average retail person who doesn't trade, that doesn't matter to you, right? As long as the trend is still intact, then what's the point in trading? Because that person's going to buy back in 3 weeks from now. But are you, as a retail investor, is that what you're doing? Are you trading your entire portfolio? Like, probably not. I know I'm not. And so when I look at this, I go, yeah, doesn't look good right now. But like, well, I get paid this Friday. I'll buy some more. And I'll continue to hold on because I don't think that crypto is going anywhere, right? It's not going to go to zero. And I just don't really see a reason for a long drawn out bear market here because there's just too good of a macro backdrop. Plus, there's the catalyst of a market structure bill where everything all of a sudden comes on chain. Perfect.
Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.